What's up everyone, welcome to the channel. In this video you'll find a lot of free education. Make sure to subscribe because every week I share some free education here on my YouTube channel. Now, as you know, I'm mainly a smart money trader. My strategies are based on smart money, but we need to talk about it for a second. Smart money has great concepts, but at the same time, as you know, 90% of traders are still losing money. And you might wonder why they're still losing money. Of course, psychology has a role in this, but also I will say that smart money by itself is not something that makes you profitable. The concepts are great, but by itself, they don't make you profitable. Actually, constructing and developing a system that works and has an edge on the market is what really makes the difference. I hope that you can really find the informations that you need in order to become successful just by looking at my free channel, but at the same time, in the description below, you can find the links to actually join my course. My course, both the 1.0 and also the 2.0, is included with any membership from the monthly all the way to the lifetime, or also there is the option to have some one-on-one lessons. So make sure to check my website and then I'll see you on the video.
Hi guys, welcome back to our channel. This is Abby from Forex XL. So today you will learn how to know about order blocks and how to spot a valid order blocks, and what are the things that you need to consider before taking the trade using the order block. So let's get started. So I guess you will watch many videos about order blocks, but this one I'll try to simplify it and explain on the simplest way. So order blocks is an up or down candle that caused the break or impulsive break from the bearish or bullish move. So as our here on the chart, you may see this like this one, right? This is a downtrend market. So lower high, lower low, lower high, lower low, right? So an order block is, like for this one, this is a bearish. An order block is the last up candle that caused the break. So so you can see here, I wanna highlight the example here. So this one is the last up candle, right, that caused this break. So this is this here is the recent low. So this low was broke by this move, right? This move. So this is an impulsive because as you can check on other candles, this is not an impulsive move. Why? Because the candles didn't have that strong move to the upside. It is just a correctional phase. So when I say an impulsive move to the downside, there's just this leg here that all sellers are in control. So as you can see, this is the last up candle that caused the break, or before having this impulsive move to the downside. So I'm seeing also an efficiency. So an inefficiency is an imbalance in the market where there's no buyers here on this area. So let me show you. So this is an efficiency where sellers are in control only. So all of the sellers are here taking trades and having an orders to have a sell order. So price might go here above here and fill this inefficiency and test this order block here. So what happened on this one is that price goes up like this one. Price did this move and fill this inefficiency or an imbalance and respected this order block or bearish order block here. So this is a valid order block because when you see this price is rejected, or when you try to look at the lower time frames. So I want to highlight that we don't take trades alone using an order block. So we want to make sure that we don't we don't take trades using an order block alone. So we use order block to have an indicator that so since we distinguish our order block, we can use that to monitor the price action of this market. So since that the price have this price tapped on our order block, you may see that the price dropped or have this bearish move right here. But as you can see, when so this is in 5-minute time frame, right? So on this area right here, oops. So in this just wanna mark it. So in this area, there's no momentum at all, right? So there's no momentum here. And when the New York session opens, it goes back on this area. But you know, it's just playing around here on this order block and then drop this massive move here. So we don't trade in Excel course. We don't teach students to trade the order blocks alone because there's no edge on that. So we consider how the momentum is going right here. So we want to in sync with the order flow. So the bias here is in bearish. So we want to see bearish trend in this area and then sweeping all of the liquidity above it. Because, you know, as you can see, when the price is consolidating like this, expect, right? The price is consolidating. There's no direction at all. So expect that the liquidity or the price will sweep all the liquidity above and below of it, below of these areas. So I just want to highlight that don't take the trades like if you see this, if you see this order block here, you will just, you know, place a trade and then watch it go to the downside. No, it's just an indicator that you can monitor a price, because when you try to look on the higher time frame, right? When you try to look it on a higher time frame, there's the significant move on this area. So maybe price could do as well when it reaches on this zone. So it is better to have a practice on the charts, like check. So this is a bearish order block. Let us try to check bullish order block. Okay. So right here. So sometimes it didn't price didn't like have to go back on that order block, because market is always creates liquidity, right? So it may be a you may try to put some mark on that and then soon it will be significant when price. So this one is, you know, is a failed order block or a failed demand because it didn't hold the price on the present price. So let's take a look so this one. So this is a bullish order block because it happens to be in ranging in this area, and then price push to the upside, and then like what I've said, there's a lot of efficiency here, as you can see, right, on this area from this open, this last down candle here, and then up to this week right here. So as you can see, price did fill at least 50% of it. Like, let us check. All right, so at least 50 to 0.61 percent. So in the later video, we can talk about how to get the premium and discounted zone. So as you can see, order blocks and efficiency are, you know, are the things that you can see when placing trades. So this one, it fills the gap. So this is the bullish order block here. So when price have this bullish move, it left a lot of efficiency. So this is a this is a corrective move right here. As you can see, there's no momentum at all. The price is like consolidating here. So it did back on this area, fill the imbalance, 50% or 61% of the imbalance, and then push it to the upside, right? So you just need to, you know, practice on the charts and check the order blocks. You need to give yourself time to see confirmations on lower time frame, because we don't wanna have up gambling trades, right? So we wanna make sure that we want to I'm not saying that this is not okay. So I'm not saying that this is not profitable trade. Some people profit on this move. What I'm saying is we want to get a high probability trades. Like we want to make sure to get the high probability trades like this one, like this move. We want to get this move and this move, right? So in order to have this flow, we wanna make sure that we see confirmations at lower time frames and how the price is behaving, how it's like if it's impulsive, or that is does the liquidity swept on the price, where's the price going. So as our example earlier, we wanna catch the big moves. So this one, so as you can see, this is just a consolidation phase, but we wanna make sure to get this leg here, or the trade here. So that's it for me, guys. Hope that you have learned something new on our channel today. See you on our next video. Bye.